Good morning, everyone. This is Marshall Giller bringing you the morning comment for November 13th. The dollar was mixed in early European trading Thursday. It retained the gains against the pound that it made following the dovish Bank of England inflation report yesterday, but it fell against the commodity currencies, particularly the New Zealand dollar, which was boosted by a further rise in the New Zealand manufacturing PMI. But stepping back from the day-to-day movements, we shouldn't forget what ECB President Draghi has said, that divergence in monetary policy will be the driving force for currency markets. In that respect, the Fed recently ended its quantitative easing and is debating the timing of its first rate hike. By contrast, the Bank of Japan recently increased its QQE program and pledged to continue it as long as necessary. The Bank of England yesterday downgraded its growth and inflation forecast, and the ECB is just getting its quantitative easing program underway. As the economic picture in Europe deteriorates, even the perennially hawkish Bundesbank President Weidmann seems to be getting on board. In an interview yesterday, he said the expansionary monetary policy is fundamentally appropriate, whereas just a few months ago, he actually voted against the asset-backed security purchase program. This shows a big change in view by the ECB Council's most hawkish member. So, the U.S. monetary outlook is almost unique within the G10. Kiwi is the only exception, and should support the dollar going forward, in my view. So now, this is the key point, though. The good fundamentals for the dollar are matched by good technicals. Last week, the DXY index broke above the 30-year downward trend line, taken from the highs of March 1985. If it can close above that trend line this week, somewhere above 87, the figure, this morning it's at 87.8, that could signal the trend of start of a long-term uptrend. Hence, both the fundamentals and the technicals are lined up for a stronger dollar. The only thing that worries me is positioning. The recent Commitment of Traders report showed that speculative long positions in the dollar have reached a record high. This may slow the U.S. currency's rise, but I don't think it'll prevent it. As for today's indicators, there's only secondary data out. German final CPI for October was up 0.7% year-on-year. That's in line with the initial estimate. French CPI is for the same month, also coming out later. In the U.S., the Job Opening and Labor Turnover Survey, the JOLTS report, for September is forecast to show the number of job openings decreasing marginally. Initial jobless claims are also due out. On the other hand, there are a considerable number of central bankers speaking, and that will probably be the center of the market's attention. Fed Chair Janet Yellen gives the welcoming remarks at a Fed ECB event, while three of her FOMC colleagues speak elsewhere. In Europe, ECB Executive Board member Kur also speaks. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Giller, head of Global FX Strategy at IronFX Global, wishing you solid trading.